Good afternoon, and welcome to the Boring Millionaire Podcast. Today's the 1 year anniversary of being boring, and in honor of that, I would like to highlight how boring investing could lead you to a millionaire status. Now, you're asking, how is it that simple, basic investing could actually generate a millionaire status? It's because of consistency, discipline, and educating yourself. The very first step is educating yourself on the stock market. The stock market is the most accessible tool that anybody on the planet could use to generate more money for themselves. So long as you are above the age of 18, you're able to invest in the stock market. And even if you're under the age of 18, you could have a conservatorship account created by a parent or guardian who's willing to do so. So really, anybody is eligible to invest in the stock market. And with that said, you can invest with any budget that suits you, whether it's $20 a week, whether it's $100 a week, whether it's $1,000 a week. Whatever fits your budget is what you could put into the stock market. And in the modern world, we have something called fractional shares. So even if you took that $20 and you put it into a $200 stock, you could get zero point 0.1 of a share of that stock. Now I know what you're thinking too. Zero point 0.1 of a stock, that doesn't even sound like I'm doing anything, but it certainly is. It's your money invested in that company, and you're invested in the world around you. One of the big keys to investing in the stock market is you don't need to be a wizard. You don't need to know about GameStop or Bitcoin before it becomes GameStop or Bitcoin. But what you need to do is just look at the companies that mold our day-to-day lives, look at the companies that shape and innovate the world we live in, and just invest in them. Invest in the world around you, invest in the society that you live in, and then as the world continues to grow and the world continues to adapt, you will grow with these companies so long as you're invested in them. Now, I say consistency because you don't need to just invest in a stock just one time. You could always repurchase shares and buy more shares of any company that you're willing to be invested in. Now, to me, that is the true bread and butter of building money in the stock market. Let's take a company like Apple. Every time Apple is down 10%, so long as the news isn't telling me that the decline is going to continue, I'm buying Apple on those discounts. Apple is a company that I would want to be involved in over the next 10, 15, or even 20 years. So any opportunity to buy those shares at a discount is an opportunity to make more money and build your money in the stock market. Now, I want to go over some of my favorite investments that I have been investing in well over a decade, and I want to highlight the year performance that they have had over the past year. Now, when I do say year, I mean from November of 2024 to November of 2025. And I did not pitch all of these stocks on the very first episode, but I have certainly pitched them all more than once through the year. And the idea that I'm doing this is, if you're investing in them every time they show an opportunity, like I did with that Apple example, you could see this kind of growth in these assets, as well as each year moving forward, what kind of growth could they see? So we'll start with Apple, up 21% over this past year. Amazon is 17%. We have Caterpillar, 36%. Microsoft, 18%. Meta, 8%. IBM, 46%. NVIDIA, 29%. Tesla 54, Alphabet 64. We have Intuitive Surgical at 6%, MasterCard at 6%, Netflix at 40%. Now, the next two are unique examples. Take-Two Interactive, as of yesterday, when I did my notes, was up 51% for the year. But even at an 8% decline today, they are still up 29% for the past year. So it's a story with two sides to it in that example. Take-Two Interactive, yes, today it fell 8%. That's the kind of example I was saying with Apple. It's something I want to own. It's something that I want to be invested in. So this discount creates an opportunity to buy more shares at a lower cost. But on the contrary, at the opposite side of it, still my investment that I made a year ago is still up 29% for the past year. So you're still up very healthy for that investment, while you still see a discount in it on the current trading day that creates another opportunity to inject more money in it. So down isn't always the bad thing. It could create opportunity. It could create a lower cost to get into the companies that you want to get into. And I would even say the same thing. We have DoorDash. It was down 18% in yesterday's trading. And as of right now, it's up 15% for the past year. So again, I don't have the math for what it was prior to yesterday's fall, but you're still up 15%, which is more than what the stock market, generally speaking, is up this year, while DoorDash is actually showing a discount for more opportunity to get involved in the stock. So that is the discipline and that is the consistency that I'm referencing in this episode. Pick your caravan of stocks, get your 20, 30 that you feel comfortable owning for the next 10, 15, or 20 years. And when they are presenting opportunity, inject your money in them and hold them for the long term. Another great idea to keep in mind while holding these stocks over the past year, many of them paid dividends. So a dividend is a quarterly income that you get paid from these companies just for holding the shares. You don't have to do anything. You're not required anything at all. As long as you hold them in your portfolio, you will receive a silent background income for the ownership of these shares. So again, another important reason to be invested in the stock market for the long term is while your money grows in an upward fashion called appreciation, you get a dividend income consistently in the background. So two great ways to generate your own money for yourself with the stock market. And the reason I really like to believe that the stock market is the best tool for generating income is because you could do it entirely on your own. There's nobody telling you anything, and you only create your little corner of the world while investing in the stock market. By investing in the stock market, you create your own nest egg or rainy day fund, so that way you have funds available for yourself in the event that you need them. I know that there are no employers just handing out financial comfort, so it's up to us to generate it for ourselves, and the stock market is the surest, most accessible way to do so. So thank you for tuning in. I appreciate you if you've been listening for the past year, and I'm excited to keep helping you for the next year to come. All episodes are available on YouTube, Spotify, and Apple Podcasts, and you're welcome to find me on Facebook, Instagram, or Threads with any questions you may have. Thank you for tuning in, and I'll see you next year.